Hey everyone, welcome to The Explainer. Today, we are cracking open what is honestly one of the most fascinating and kind of terrifying case studies in recent crypto history. We're looking at a project that came in hot, promising an absolute revolution, drew in this massive, deeply passionate community, and then it delivered a total catastrophe. We're going to perform a full autopsy on the Origin LGNS token. Our goal? To separate the brilliant marketing illusions from the cold, hard, verifiable reality.
And well, to understand exactly why we're doing this autopsy, you really just need to look at this stark reality right here. Negative 94%. Yeah, the LGNS token plummeted, literally crashing from an all-time high of over $84 all the way down to roughly $4 today. It wiped out almost all of its value. So the big question is, how does a project with such massive, unbelievable hype fall so far, so fast?
Okay, let's dive into this because we really need to understand the massive gap between the two sides of this story. On one side, you've got the promise that seduced the market, the idea of a brand new, revolutionary digital civilization backed by a staggering 1.8 million passionate token holders. But then, on the other side, you have the reality that actually hit investors' wallets, that brutal 94% price collapse. So we're going to figure out exactly what happened in that giant gap between the promise and the reality. To do that, we've got to start right at the beginning. Section 1, the seduction, selling the ship of origin. Let's take a look at the marketing hype and this sort of utopian vision that convinced so many eager investors to board what the community famously called the ship of origin.
Now, when you look at the initial pitch for LGNS, it was incredibly ambitious. They essentially took every single crypto buzzword you can think of, threw them into a blender, and served it right up to the masses. They called it DeFi 3.0, which, is supposed to be a whole new generation of decentralized finance, apparently just skipping right over whatever 2.0 was. They promised extreme privacy using advanced cryptography, specifically ZK rollups. If you're not familiar, that basically lets you prove something is true without revealing the underlying data. Then they pointed to a strict, fixed supply of 166.3 million tokens to create this artificial scarcity. And perhaps the most enticing hook of all, an auto-compounding staking system promising to pay out rewards every single 8 hours. It's no wonder this whole package successfully attracted over 1.8 million holders.
But here's what you really need to take away from this. LGNS wasn't just selling a technology stack, right? They were selling, and I quote, a revolutionary digital civilization. They were selling a highly urgent, deeply emotional dream. The narrative was perfectly designed to make you feel like, hey, maybe you missed the first boat to crypto wealth, but here is your second chance. A guaranteed ticket to a life-changing return. Honestly, it was a masterclass in aspirational marketing.
The thing is, though, the market rarely cares about a good story forever. Which brings us to Section 2, the market's verdict, screaming warning signs. We're going to pivot sharply away from the community's passionate storytelling and look at the cold, hard reality of the technical trading data.
Now, what's really interesting about this slide is that when you look at the technical indicators, the moving averages, the short, mid, and long-term trend lines, the data is just incredibly lopsided. A staggering 88% of those signals were bearish. Only 12% were bullish. When the data is this heavily skewed, it's telling you that the overwhelming consensus among professional traders is that the price is heading straight down. It's a clean sweep of weakness.
And that absolute weakness translates directly into market sentiment. Just look at this number, 16. That's the current fear and greed index for this asset. It is sitting deep into extreme fear territory. Think about it. Major price runs, the kind that take a token to the moon, those are fueled by confidence and, frankly, greed. They rarely, if ever, start when the market is completely drained of confidence and terrified like this.
This actually brilliantly illustrates a concept professional traders use when they're trying to navigate a crash exactly like this one. It's called bullish divergence. Okay, so think of the token's price as a car, and the momentum indicators, the actual power behind the buying and selling, think of that as the engine. Right now, the car is still rolling downhill. The price is making new lows. But if you look closely at some of the data, traders are looking for signs of the engine starting to rev higher. That mismatch, where the car is moving down while the underlying engine revs up, that's a huge clue that hidden strength might be building, and the driver could be getting ready to slam on the gas.
But how do you actually spot that without getting totally burned? Well, it's a pretty methodical 4-step process. Step 1, you monitor the price lows. Step 2, you check momentum indicators, things like the RSI or MACD. Step 3, you identify that divergence we literally just talked about. But here is the absolutely crucial part. Pay very close attention to Step 4.
Wait for the price to confirm. Divergence is just a hint, guys. It is not a guarantee. The biggest mistake amateur traders make is jumping the gun and buying on the divergence alone. The pros, they always wait for step 4. They let the price confirm the signal before they risk any real capital. And when you check out the projections for 2026, you can clearly see why waiting for that confirmation is so incredibly vital. This table outlines the massive spectrum of uncertainty for LGNS right now. The bear case, which predicts a further drop down to between $2.50 and $3.80, is currently marked as a high likelihood. The base case sits between $3.80 and $7.80. And that super optimistic bull case, the one jumping back up over $8 to $12, yeah, that's sitting at a really low likelihood right now. Because of the overwhelming downward momentum, the short-term technicals lean heavily toward the bear or base cases.
Let's move to and see how this builds into the final piece of the puzzle. We've looked at the shiny marketing, we've looked at the brutal market charts. Now we actually have to look under the hood at the terrifying fundamental truths buried deep in the project's foundation. Section 3. The autopsy. Looking under the hood.
So the crucial point is really understanding exactly what you are buying into. Independent security analysts made a massive discovery. The LGNS smart contract is an unverified contract. Now, what does that mean? It means the code cannot be publicly read or audited. It's a complete black box. Honestly, for a project throwing around fancy terms like DeFi 3.0, having an unverified contract is hilariously ironic. Because it's unverified, the owner retains this incredible amount of centralized power. They could potentially change the rules, they could stop people from selling, or even arbitrarily print brand new tokens out of thin air. It completely defeats the entire purpose of decentralization. No way around it.
And unfortunately, that unverified contract, yeah, that was just the beginning. When independent investigators really started looking past the DeFi 3.0 buzzwords, they found an absolute mountain of fundamental red flags. The core team? Completely anonymous, meaning zero public accountability. The web traffic? Deeper analysis showed basically zero organic search traffic. Almost the entire thing was being driven by a highly complex referral system. And perhaps the most alarming detail of all, the project filed for potential $100 million stock offering. That poses a risk of massive dilution for anyone already holding the token.
When you stack all of this together, the unverified contract, the anonymous team, the sketchy referral-driven traffic, the picture gets incredibly dark, really fast. In fact, it led independent fraud expert Danny Decky to deliver this brutal assessment. He didn't mince words at all, calling the project, quote, a crypto cult, a pyramid scheme, a ticking Ponzi bomb. It is just a massive narrative gut punch that directly contradicts the whole utopian digital civilization the marketing promised us.
So after exploring the dizzying heights of that $84 promise and then plunging into the terrifying depths of the $4 reality, what do we actually learn from all this? Let's zoom out for a second and move to Section 4, the ultimate crypto lesson.
Look, if you remember absolutely nothing else from this explainer, remember this one fundamental rule. Verifiability must always trump a good story, always. To survive the deafening noise of the crypto market, you absolutely need a complete toolkit. You need the macro view to understand the broad market seasons, you need technical analysis to read the immediate weather on the charts, but most importantly, you need deep, thorough, fundamental analysis to know if the foundation you're standing on is actually solid. You have to learn to look past the brilliant marketing, ignore the passionate community hype and the exciting buzzwords, and verify the code and the team for yourself.
Ultimately, the collapse of LGS represents one of the biggest never-ending conflicts in the entire crypto space. It's the battle between an imagination-capturing story and boring, essential security. So I'm going to leave you with this final, somewhat provocative thought as you evaluate your own choices in this market. What matters more to you? The exciting promise of what a project could be, or the fundamental security that you can actually see, audit, and verify? Think about it. Thanks for joining me on this explainer, and stay sharp out there.